Hello everyone, I'm Daniel Flatt and welcome to RegTech Asia 2020. Well, despite everything that's been put in front of us so far this year, we've just about managed to make it through to September. With the dawn of a new decade already overshadowed by a trade war between the US and China, January threw up a host of fresh problems of almost sort of biblical proportions. Forest fires in Australia, conflict between, or a possible conflict between America and Iran, a plague of locusts in Kenya, and to the upset of millions of devout fans across the globe, Kobe Bryant, a basketball god, was killed in a helicopter crash. Of course, all of these events have been overshadowed by the COVID-19 pandemic. At one stage, more than 1/3 of the world's population was in a form of lockdown. Global GDP growth has been hit hard, and social distancing is now the new normal. Governments across the world have been compelled to close off large swathes of their economies. Central banks have attempted to reignite quantitative easing to stimulate activity, and financial institutions have been forced into finding new ways to support their customers throughout this unique period. Social distancing has put KYC into sharp focus. The balance between onboarding new customers, providing additional financing and other forms of financial relief, and the need to detect the sad but inevitable jump in criminal activity on the back of COVID-19 has been a delicate one. On April 1st, FTAHK issued a statement pleading with governments to work with financial institutions and other businesses to use flexibility to address the challenges posed by the pandemic. In line with this, and in what may prove to be a taste of how KYC will be performed in a post-COVID-19 world, regulators across Asia and globally reiterated their support for more flexible approaches to KYC compliance, taking what they term a risk-based approach, with many opting to allow reporting entities to confirm identities digitally. In early April, for example, the Hong Kong Monetary Authority encouraged authorized institutions and stored value facility licensees to seek out technology to enable remote onboarding and account opening services. There have been many more examples across the region. So in line with the topic today on the opening panel for RegTech 2020 Review and Outlook, I'm very pleased to have with us our expert guest to discuss exactly how the regulatory technology industry has weathered the storm, but more importantly, come to the fore in support of the global initiatives designed to keep our economies moving. So with me, I have Bénédicte Nolens. She's the head of the BIS Innovation Hub Hong Kong Center. I have Brian Tang. He's the managing director of the ACMI and the co-chair of RegTech Committee, FTAHK. I've got Grace Chong, Counsel of Simmons and Simmons JWS. And we also have Malavika Solanki. She's the member of the management team of the Derivatives Service Bureau. Just before we kick off our panel, just a reminder to our audience out there that, please put your questions to us. I'll keep an eye on them over the duration of this session, and hopefully we can answer a few of those. I dare say if we can't get to all of you, we can find a way to get back to you somehow. Okay, well, in line with the nature of the panel itself, potentially simple question to start off with, and I'll kick off with you, Bénédicte. How has the pandemic shaped the priorities for the RegTech sector, in your opinion?
So I think you touched upon one of the important developments already, which was the FTAHK papers. I think FTAHK made a quite big push, actually starting last year, but with the pandemic, I think they really added to the push for digital onboarding and digital identity. So personally, I think that is a very important aspect. I think other aspects that the banks have looked at is e-signature. This was something where the banking sector was widely behind, I would say, what the fintech sector was already doing on all levels, onboarding their people, onboarding customers, accepting products, orders, etc. So this is an area where I've seen a lot of speeding up of the adoption process.
Would you say that the pandemic has accelerated these issues, or that, as in they were already sort of coming to the fore? I think these have been in discussion for a long time, but the pressure that it's built up has put this is basically elevated this area somewhat.
Yeah, I think the point is it's elevated it to the board level, right? Because before that, it was more like the renegades in the organization who were saying there's all this technology and it would be great if you use it. And then came the virtual banks, which were, you could say, side businesses. But now it's on board levels that people know that it's time to adopt this kind of technology ASAP.
And do you think that's made it easier? Because when you're talking about some of these subjects, they're sort of regulation technology, it's important to the certainly to us here and the people listening in, but at a board level, I can imagine sometimes they've got a lot of things they've got to chew on, and maybe technology around sort of surveillance monitoring doesn't necessarily register as quickly as it might. I mean, I assume what you're saying is that it's made it easier to have these conversations, and therefore made it a little bit easier to adopt these technologies.
Well, actually, funnily, surveillance always made it to board levels. So this is actually a topic they're used to. But the topic of putting your customer first and the reality that they can't come to your bank now or shouldn't because it can cause a spread, that is the new reality, I think.
Fair enough. Brian, I'll bring you in. What's your take on the last sort of 7-8 months we've had?
Well, all of us have been going through very interesting last 7-8 months, especially here in Asia and in Hong Kong. I guess my observation on the RegTech evolution is a couple of fold. So on the one hand, it's been wonderful that at least the Hong Kong regulators are now putting this front and center. So in Hong Kong, as many would be aware, the HKMA has been going down this journey of broader adoption of RegTech in Hong Kong, which, last year we had the HKMA's AML TFT RegTech Forum, and that was followed on by the engagement of KPMG to assist it with a survey and a white paper that's coming out for FinTech Week in November, and then an event, kind of an ecosystem building kind of activity. So that's great, because one of my anecdotes about RegTech is it's not your typical technology solution whereby you normally have to convince the client, that the customer, in this case, a financial institution, to buy in. In this case, most of the times, the financial institution's first question will be, so what do the regulators think? So you actually have to have the third party to kind of help pull it together. Now, that being said, and I very much agree with everything that Bénédicte has said, in the RegTech as with the law tech type space, if you are in e-signatures, if you are in online communications, it's been great, right? Because those have been, we've all, look at us now working on a day-to-day basis using these technologies. But if you are in other spaces, some banks and some organizations may be reprioritizing, so it may not be as high a priority depending on what space you're in. And I kind of describe this as a tale of two cities. If you're a big RegTech that has established product line, especially in these kinds of spaces, this is great. But if you're a startup that doesn't have a lot of traction, your runway is running short, cash flow is, is harder to get the meetings depending on in the different sectors of RegTech. So some RegTechs and law techs and even fintechs are struggling because if they don't have the serious backing. In Hong Kong, as you would know, our virtual banks have significant backing either from big banks and or big tech companies. So they're fine, but there are other, startups, whether RegTechs or fintechs, who don't have that backing, who don't have that track record, actually are finding a harder time, like a lot of startups in this current environment.
What are your observations on that? I mean, how are they adapted in any particular way, or what methods have they sort of adopted to get through?
Well, I think like a lot of startups, it's conserving cash and basically repivoting or focusing on products that can generate cash flow and interest in this current environment. I mean, as Benny mentioned, because of the FATF new rules, if you're in crypto, it's good because there are lots of, and there's more institutionalization of that space. So that longer tail, that's been beneficial. But for others, I know quite a few RegTechs who are fundraising right now, and it's been tougher right now. So you do like whatever a normal startup can do, which is kind of rationalize, focus, and try to work on more relationships. I mean, so some of the things that we're trying to do to help grow that space is we're organizing the World RegTech Summit again this year. And the idea is to actually put the solutions together with the users. And the users might well be traditional financial institutions, banks, insurance companies, asset managers, together with the different technologies and the regulators. I think the great news now is the regulators are really keen on this. but some of these technologies are quite cutting edge and evolved, and AI, blockchain. So is it not fully tested? So I think the good news is I think we're all focused. We all now know that we have to be online more. So everybody's focused on trying to get that done, but we still need to do internal transformation at a lot of large institutions to do that.
But in terms of focus, you mentioned these events and regulators coming on board and taking this seriously. But in specific relation to COVID-19 and the pandemic, where is the actual priorities? What do people really need, and are people adapting to that, in your opinion?
Well, so that's a broad-ranging question. So as you would know, with banking, there's commercial or wholesale, and investment banking, and then there's retail, right? So one of the things we all have learned from a retail point of view is we can't go out to even buy groceries, when it was the worst. Now in Hong Kong, things are much better, right? But at one stage, we all had to resort to that. So you needed the ecosystem to help with that. So that's been great from a retail point of view. People are better understanding that. People are as Benny said, focused on the user experience, because now you have grandma using it, right? Because grandma needs to know how to use that. So you need to have systems that grandma knows how to use, right? Although I know people who actually order food online for the grandparents, right? Because, grandma doesn't know how to use it. So that's on the retail component. But, when you get into wholesale, again, the question is what aspects of the banks that they are focused on. And I know of lots of initiatives still ongoing, right? If you worked in trade finance, if you worked on derivatives, you're still chugging ahead. Now, if you had budget allocated for developments, great. But if suddenly you can't get hold of your counterparties who are actually generating a revenue, and therefore your targets are not being met, you may not use all of that budget for, you may have to defer that budget for later on. So I think it's a matter of prioritization, and some of it is more apparent than others, because especially in the wholesale space, at least in banks, you haven't seen the wholesale retrenchments or furloughs the same way that, say, law firms and other industries are being hit, and professional services because of this. I think there's a lot of redeployment internally and internal prioritization. But I think that the good news is I think a lot of us maybe feel that we now know how to deal with COVID a little bit better. The first 6 months was just frantic, right? And like, what's next? And is it over yet? No, second wave, third wave, fourth wave, right? So we're learning that these will come in waves, and how do we readjust to that? I think longer term, this is great news for RegTech, because this is, intrinsically, I call RegTech the secret sauce, right? It sells wealth tech, it sells insurtech, it sells digital banking. So all of these spaces, as they each fire away, RegTech can and should be there to assist.
Thank you, Brian. Malavika, I'll bring you in. So in line with the comments that have already been made, how has the pandemic shaped the priorities for the RegTech sector? And obviously you've got a specific area in derivatives. I'd be interested to hear your thoughts.
If we look kind of at that wholesale sector that Brian was talking about, before the pandemic, the focus was very much on things like IBOR reform, with the new risk-free rates being set by governments around the world. There was also a focus on data standardization and reporting. And again, this is something that came out of the Financial Stability Board's work as following the Pittsburgh Agreement of 2009. During what the COVID period seems to have done is really is concentrate minds. To Brian's point, it's not that people aren't looking at that, because that is the bread and butter of what brings the future. And so that needs to keep getting delivered. What COVID seems to have done is a couple of things. One is I think it's caused people, with everyone working from home and working remotely, it's caused an increased focus on cybersecurity related matters. And again, you'll see that the Financial Stability Board has been publishing papers on what they think is a good framework on the areas that they think institutions around the world need to be focused on. So I suspect we'll see a lot more happen there, probably at a much faster pace, because some level of remote working is going to continue for some time in the new model, wherever that lands. The data and standardization piece is interesting. People seem to be looking at what they were doing before, but now trying to find efficiencies and alignment within their own data functions. And they're starting to look to understand, okay, where does the work I was doing before, how does that align with what else I can be doing on the revenue side of the equation? What is more strategic? And those pieces. And last but not least, you've got this idea of the Benny and Brian have both touched on, which is digitization of onboarding. So even from a wholesale perspective, there used to be areas where paper had to be sent, and things like forms had to be filled out. Somebody needed to review it in person. Well, if there's no one in an office to review it, you're going to have to adapt within a matter of days. Because as an institution, if part of your onboarding process is dependent on paperwork, you don't have the luxury of monster adapt because your deal flow changes, whether it's in data or insurance or some other part of the structure. So it's been really interesting to watch that you've still got things like IBOR reform, you've got things like the unique product identifier, which the regulators are working on. It's a question of, okay, how do you integrate that with all the other pieces going on?
And well, how do you do that? I mean, to me, we talk about priorities, but of course, when events like this happen, suddenly everything almost becomes a priority. But I mean, that has to be rationalized somehow. I mean, have you seen any evidence of that?
So what's been interesting is certainly what we've been seeing and hearing has been this idea of, and Brian touched on it briefly, which is institutions that were already, suppliers that were already in the chain, that the firms already knew. To some extent, I think they stand to benefit in the short term slightly more, because institutions are telling us they don't necessarily have the bandwidth to start to onboard and to execute new master agreements with new institutions at the same pace as before. Because of this urge to minimize risk, you're starting to see alliances with some of the existing suppliers and potentially scale ups and demos and trials that way. Not quite sandboxing, but people saying, let's try this and see if it works. So I think there's that, but there's also this, there seems to be, to your point about how people are prioritizing, what we're seeing is that people are starting to think about what, not just what their RegTech needs are, but also what problems are solving and what strategic benefit can they deliver to the firm on an incremental basis as part of the RegTech initiative that they're implementing or seeking to implement. That, if money is scarce, and if money and time within an organization has got more scarce, then the way that tends to focus minds on what that institution wants to do.
Yeah, I suppose there's slight irony there, really, because you're talking about making it's harder for to onboard new sort of fintech or RegTech companies. So if you're already onboarded to some extent, it's a bit easier to have these conversations. I guess it still fundamentally is down to some extent trust and the relationships that you have, right? I think that's a fair point.
Absolutely.
Yeah. Okay.
I think that that matters more than ever. And again, it comes down to what is the institution trying to accomplish? What are its needs and priorities? Are you trying to solve, in the near term, a data problem? Are you trying to solve an onboarding problem? Is it an AML issue? What is the actual problem? What is the job to be done? And therefore, how do you then focus your minds on how resources are deployed as an institution? And that people may find that their existing set of providers aren't able to move in the time frame they need. So they're forced to look at new providers. And there's an opportunity there. But it's very much at looking at what is the problem that your institution is trying to solve for, and therefore what are the best partnerships to form in order to get there in a sensible manner.
Grace, I'll bring you in. You've obviously heard what the panel has said on the issue of priorities. From a legal perspective, what are you seeing?
Sure. I entirely agree with Malavika now that currently the priorities, a lot of organizations will be tempted to look at established entities in the market. But there are areas where I think both government support as well as industry marketing has shown that basically during the COVID period, I've seen a larger range of new entrants in this space, especially. So where I usually get pitched in is that usually I get asked to also help with the implementation of RegTech solutions, and also to help entities compare between the RegTech solutions. And as part of the application of COVID-19 grants, we were looking at some of these in particular and how they could fit in within the particular entity's implementation solution. So currently in Singapore, what we have seen, which is quite encouraging, is that the government introduced certain major support packages for the industry. There was one which involved 80% funding support for adoption of digital solutions under MES Digital Acceleration Grant, and the MES SFA AMTD 6 million financial FinTech Solidarity Grant, which covered 70% of the qualifying cost of hardware and software. So that has been quite popular, and several of my clients all applied in succession, and they said that the process was very smooth. Some of them got it within 1 week and was a very timely response, which was much appreciated by the industry. And for smaller financial institutions with no more than 200 employees, there was a certain grant that gave the financial institutions access to 2 tracks called the Institution Projects track and the Industry Pilots track. So what I've been saying is that the industry is now moving on to what I call RegTech 3.0, which is a move from just looking at basic KYC and know your data compliance practices, but really increasingly I'm seeing RegTech investment more less as a cost of doing business and more or as a business enabler, looking at the opportunities using your RegTech technologies in-house. So I think one example which I think Brian and Bénédicte would have alluded to it, and I know Bénédicte has crypto experience in this space, is that I've been working with several exchanges and brokers who have been examining travel rules solutions, for instance. And I sit on the board of Access, which is a blockchain association in Singapore, and we have been having various discussions with the regulator as well as the industry. And quite a lot of my clients are now considering, basically and trying to compare between different travel rule solution providers. So when you are having a new regulatory development whereby there are certain regulatory expectations in this space, you'll be looking at issues like interoperability, the ease of managing going forward, the cost involved, and whether the technology is flexible enough to absorb future regulations. And sometimes it is very difficult without a firm certification or understanding of how you compare and how, when a solution provider tells you they're 100% compliant, how do you actually test this out? So I know Access currently is trying to test this out through a certain certification, but sometimes it involves quite a lot of difficulty for exchanges and different providers to actually assess the different types of solutions, which can range from alliance networks, blockchain-based protocols, and certificate authorities. So I think what Brian mentioned on being able to tell between the RegTechs, often there's also an issue which I see of concentration risk. And this came out also from IOSCO's consultation on proposed updates in relation to the 2005 outsourcing principles, where they flag concentration risk. But in practice, it's very hard for firms to have insights, or even if they get the KPIs of the firms, to be able to tell whether their provider is able to support and the business continuity practices, how they'll come live in a particular scenario. And access and audit rights also happen to be a very tricky issue in the market.
Okay, I'll come back to that point, but I'd like to address the first point that you made just briefly. You mentioned the initiative. You said the MAS. Am I correct?
Yes, correct. The
now, was there any indication of priorities within this type of funding, or was it as you say sort of based purely on the sort of size and scale, or was there indications that certain areas were of higher priority?
So there were certain conditions which a fintech had to meet in order to qualify for those grants. So for example, it was really focused on developing productivity, and some of the hardware and software had to be linked to development of functions like cybersecurity, for instance, or certain RegTech that helps with onboarding. So you had to show a business case and a proof of concept grant, and also do certain reporting in line with being able to access those grants. I've spoken and worked with entities that both succeeded in the grants as well as failed in the grants. So sometimes there's quite a lot of learning there. But I think this is something which the industry is really looking to really improve and access, and it was definitely welcome during this difficult period.
Okay, Bénédicte, can I talk to you a little bit about your time at SC Ventures, because I think during our previous conversation you were sort of quite involved in the sort of the pointy end of development. Would you be happy to talk a little bit about what some of the focus was at Standard Chartered, and probably just explain what SC Ventures is for our audience, if you don't mind?
Okay, so SC Ventures is the innovation arm of Standard Chartered, and their focus is really to create new ventures that create new business models. Oftentimes, they're platform-based business models. So they follow the so-called new economy. So there's quite a lot of solutions that they're working on, but one is the virtual bank. And so the virtual bank is now, I think, either live or in final beta phases. And they have piloted, for example, a lot of these onboarding technologies. So what you now see is that the main bank starts asking, should I be having something as quick and convenient as that? Because the current system, to be frank, is really not as quick or convenient, but the virtual bank one is extremely quick and convenient. The problem, however, is as a global bank, and that's true for every global institution, you can do something locally as a test, a virtual bank test, but that's not quite as easy, let's say, to scale globally, right? If you need to scale globally, this non-face-to-face onboarding, it presents different risks, for example. But yes, this kind of a side arm drives innovation.
That's what I was sort of aiming at, actually, is that sort of model. Not that I'm trying to overly promote SE Ventures, that's not the purpose of the question, but it's that model has been in this environment has probably been proven to be quite useful. Would you say?
Very useful. Yeah. Very useful, because if you empower people to do this, to bring change, they will find the solutions to bring change. And if you don't empower people, then what happens is by the time you get something like COVID, you're actually unprepared.
Brian, I'll bring you in to sort of extend on that point. Have you seen increasing levels of innovation during this period?
My candid response to that is, I think, again, at the beginning of COVID, people like, right, how am I going to look after my kids and work at the same time, right?
Yeah.
I think as time has gone on, as Bénédicte has mentioned, I think that there can and are circumstances, as we would like to hope, of the tail wagging the dog, right? The innovation lab hub thing was this side thing. This is the main, Barnes & Noble business, but we have this little side, Nook business, right? And yes, that'll go on perfectly. So I think, as was mentioned earlier on, there is now, previously, even for the more curmudgeon board members, they kind of get it, right? They get the digital aspect, why it's important. I think they understand why and how it impacts from a user perspective and the like, and potentially need to think about how new business models need to be revisited. That being said, I think we, and Grace used the phrase, I think, we're in business continuity land still, right? So people are still trying to work out how to handle the back end, right? How things are going to operate in the new normal, right? Do we need so much office space? Right? How do we do one of the great points that was added? If we have staff who are working from home, from a security, cybersecurity, and other security point of view, and employee surveillance point of view, how do we make sure that their computer is not being hacked? What's happening around them, et cetera, right? So there are all these new questions that were not previously questions that needed to be answered more immediately. Right now, around that, yes, technology and other modalities can serve as solutions. Oh, by the way, we've been thinking about that, say the fintechs, right, for some time, right? And we've been thinking about that, right? So I think it has allowed for more attention in terms of some of those solutions. But I think depending on an institution by institution basis, the rate of adoption and change varies. So as Malavika said, if your core business was wholesale, right, you're still chugging along with wholesale. You're trying to deal with those kinds of issues, right? Yeah. And then the longer term, the thing with regulatory change is, the regulators set the rules in place, and then there's a lead time to actually follow, right? Whether it's the crypto travel rule or the various EU initiatives, right? So these are long-going projects that have to continue. But in the meantime, in some ways, COVID has served to be a distraction, I think. But in other ways, it has been a useful impetus for mindsets to shift. So people who previously didn't get it now kind of get it, right? But whether or not they can deploy the time and effort to solve that for that now, I think a lot of people are frankly still firefighting. So I think the development with the digital banks is great because they're now positioned in a way and coming out with new, and it's been interesting seeing each of them launch, because each of them are differentiating themselves, rightfully so, right? And so each of them are innovating in their own ways. So I think all of that is great for the ecosystem, for the overall RegTech space. I think the regular, some of the things, the sharings in the space is, well, with this online, and it was hinted by Malavika, there are new risks, right? So there are new problems that are coming around that sometimes RegTech can solve, but otherwise there are other that may actually create their own new issues. So I think overall it is a good thing, I'd like to think, but the reality is that there are, a lot of big companies have got earnings downward trends because of what has happened. So that's causing senior management to focus on some of those things as well, to maintain, to see whether or not they're otherwise going to be forced to cut jobs and all this kind of stuff. So there are lots of things going on.
Okay.
Maybe the one point to add is that a lot of the new businesses, including the fintechs and the regtechs, they are so-called cloud native. That means that they start on cloud, they start with the proposition of cloud, they know how to collect and analyze cloud-based data. The big problem of, let's say, the the banks in a sense is that they're not fully on cloud, most of them, right? So unless you can do that move, in fact, you probably can't onboard RegTechs quite as easy. Or secondly, you can't maximize the data elements. So this is a very important transformation as well.
I'll bring you back in, Brian, I promise. But have you seen any examples or any banks that are better positioned? What characteristics do they have? You mentioned being on the cloud. Is that a primary, sort of benefit then?
Yeah, cloud is important, but there are more and more banks who are now doing it. But yeah, it wasn't the main trend 5 years ago. So this is very critical, actually, in order to maximize the benefits.
Okay, Brian, I'm sorry.
No, not at all. I just wanted to follow on with Bénédicte's point, and it's not meant to be a plug, but actually on Friday, I'm hosting a webinar with a cloud company, right, and also a Big Four auditor. Because one of the how the regime works is the ultimate liability and responsibility is still with the bank, the AI, the authorized institution, and they need to get comfortable. So how do they get comfortable? They get audit reports from a Big Four potentially, right? So we'll be talking through some of those processes as to how the intersection of cloud companies, who of course that's their core competency, and their offerings now that can have all the benefits that Bénédicte had mentioned, and then together with the intersection of these audit companies that are coming in to give comfort to the internal op risk and other folk for the adoption of more core banking aspects to be put on cloud.
Malavika, I noticed you were nodding. Sorry, Grace, I'll bring you in a second. I noticed you were nodding, Malavika. Do you want to add your thoughts onto that?
So on the point around the op risk and the audit piece, actually, that's a really important one. Well, for the institution itself, in terms of its own business, but also in terms of the way it brings on suppliers and RegTech providers. So what the more grown-up RegTech institutions are starting to do, or suppliers in general, but particularly RegTech, is starting to look at putting in, if they didn't have it before, starting to look to introduce various IASC standards for operational risk and third-party risk assessments and things like that, where control frameworks are evaluated by an auditor and the report published and made available to anyone that's acquiring that product. And that's a really big part of this, because if you're an institution that's looking to introduce RegTech, you need to have some level of comfort that what you're bringing in is of sufficient quality and resilience to be able to match what you need. And you need to make sure that their processes are in line with what you do. So that's part of, for example, the way a number of larger firms are operating, but also to the point to your earlier question, kind of to bring it full circle, post-COVID, one of the first questions we were faced with, but a number of our partners that we work with were faced with was, okay, what does stability look like? How quickly do we get to stability? What are our processes? People know what their processes are because most of the larger institutions, certainly the banks, whether they're retail or wholesale, conduct annual DR, disaster recovery exercises, etc. So there's some handle on that already, but there's no such thing as the kind of tests we've all had to go through over the last few months. Who's come through that? So what for you as an institution does baseline look like? How much resiliency do you have? You look at those pieces and then look to make sure that your suppliers are also able to support that in the way that you need. So that's part of your survival program. But that also, I think, becomes part of how you scale going forward. And that point around auditing your risks, understanding where your suppliers are, understanding how they operate, to make sure that they can continue to do for you at scale what you need them to do.
Thank you. Grace, you wanted to say something, sorry.
Sure. I just wanted to add on the point in reference to what Brian said about cloud and RegTechs that do store data in delivering their solutions, is that I think right now it might be useful for those operating in Hong Kong to note that this is a particular point of contention in Hong Kong because of certain regulatory guidance which has been issued in the course of the last year by the Securities and Futures Commission. So we have been discussing on this topic with quite a lot of the cloud providers and SaaS providers in Hong Kong, because essentially there are new requirements that require firms to ensure that regulatory records are kept in a way that the SFC would be able, which is the regulator, would be able to have access to these records. And essentially these providers are required to provide a certain signed undertaking or certain consent for the regulator to access these records without notifying the entity. So this has been a point of contention and huge discussion in the industry in the course of last year over access and audit trail rights. And I think this is likely to be one of the key topics going forward, especially if you're working with RegTechs that may have access to your data. So it's still an unresolved issue for Hong Kong, but I think as we evolve in this space, other regulators, we might start seeing certain types of requirements such as these as well.
I want to talk a little bit about the initiatives that regulators have taken, have sort of pushed forward, and you've obviously mentioned the MAS. But just before we do that, you're obviously in contact with a lot of sort of RegTech, fintech sort of companies. You mentioned they obviously have to, when they were sort of trying to file for the MAS to get sort of grants and stuff, they've got to prove what they are, what they do. In a similar vein, what struggles do they have, or what conversations go when they're trying to onboard with finance institutions? What are the sticking points?
I think I would say that one of the key sticking points has been demonstrating that they have the key base of cybersecurity and other types of controls. So typically a lot of FIs use a general type of survey, or they have a certain kind of onboarding process, which is very extensive. And different FIs may not have a similar process. Some may be more extensive than others. And that process can be quite long. With some of the RegTechs I've talked to, they might witness an onboarding process of 2 years, even if your solution is tested for 4 to 8 months. So it's an ongoing issue in the industry on how you arrive at that minimal level, or whether you can provide certain certifications to show that you have arrived at that space, how the organization can assess the quality of your audit. Those are ongoing issues for how you can make some of these processes more efficient, and how you are able to demonstrate that you meet the requirements of a financial institution. Because I think it was also flagged in the Kaspersky report for 2019 that outsourcing risk for cybersecurity is one of the top risks, which was projected by them. And it continues to be a high risk that your use of your outsourced providers may ironically expose you to more risk, and sometimes create more regulatory burden in the case of Hong Kong requirements on external cloud data storage providers, where it can actually be much more complicated to use cloud than to even store a copy in your local entity. So there are lots of interesting issues like that which you must navigate, and the difficulty is that regulation is always changing. And the moment you get ready to onboard, you might find yourself facing a host of whole new regulations which you have to tweak and adjust with the organizations. So I would say it's not easy based on my experience working with the different RegTechs and companies that we meet in this space.
I mean, in my experience, which is certainly limited compared to your guys, but when you're dealing with someone, you like to press the flesh, and in some instances, you get a better sense of that just by doing it in person. Has the process of onboarding, despite the need or the potentially increased urgency to adopt new technology, has the fact that we have been socially sort of distancing just made that a little bit harder, or is everything, can everything be done via this sort of a web chat, and we can all get on and make our decisions as easily as that? Is it been as simple as that? I'll open this to anyone who wants to answer.
Actually, personally for me it's been equally efficient, but okay. I think it just depends on people, to be frank. Some people find it equally efficient and others don't. And I think there is an element, you could say, of fatigue, which is that the first few months it was easy. We were all gung-ho, and it's like we're used to this now. And actually, to a certain extent, it was better. But after a few months, it gets old as well. And as you say, for important decisions like tech adoption and so on, you do need to have some hands-on contact, right? So, but I think nevertheless, if we think on balance, right, these months have 100% played in favor of digitalization, right? And you see that in so many ways, but the valuation of the big techs is just amazing, right? And the other thing I want to cite as an example is Robinhood, for example. It shows that the consumers now know that they can do, let's say, self-service. And once they know that they can do self-service, you may expect that they want to do self-service because it's more flexible. So you have to keep all of these dynamics in mind. As said, on balance, it's hugely beneficial for RegTech.
Okay, thank you.
Maybe if I can chime in on a little bit.
Yes, of course.
No, just briefly. So I think I just want to touch upon a point I mentioned earlier on, which is the technologies are still evolving, and that's part of the really exciting thing about the space, right? But if you look at 2 years ago, biometrics was the thing, right? And facial recognition and the like. Since then, there have been concerns raised by biometrics. There are now more deep fakes, and it's all open source where you can do more deep fakes. So now, potentially, various either users or regulators and even potential customers may give pause to some of the evolving technologies. So I just raised that as a matter of I think we're all progressing in the right direction, but that's why the regulators still need to have some of the traditional safeguards. Ultimately you can do remote onboarding, and there's more latitude as to when you can finally confirm the person face to face, right? So to answer your question, I don't think it'll ever be, nor it should ever be purely virtual, but we're slowly getting there. The technologies are getting better, but then the counter technologies are also getting better too. So that's what makes the space so interesting.
Fair enough. Unfortunately, we're very close to having to sort of wrap this opening panel up, but I'll give you all the opportunity just to say sort of a couple of sentences each on if you were to, I know it's a sort of broad brush question, but if you were to have the opportunity to speak to a specific regulator and say, look, this is where you should be providing support for the subject that we've covered, what would you suggest? So Brian, I'll start with you.
Thank you. So funny you should mention that question. So as a lot of people here in Hong Kong would know, the HKMA recently launched a survey on RegTech to try to have an understanding of the ecosystem. And I was lucky enough to be interviewed for their proposed white paper, right? And what we had put forward, and again, I don't know how well it'll be accepted, and Grace will like the sound of this, was actually something similar to Singapore, right? So one of the things is for RegTechs, Grace has mentioned this. It has a tremendously long procurement cycle, right? It's called a valley of death. Even if you get, I call it that. Even if you have the POC, you still might not get implementation, and how and when. You wait and wait and wait, and your funding runway will go out. So actually, having to have direct funding that helps. So the other part of the survey in Hong Kong was that we have leading banks, like the one that Bénédicte was with, that are doing great things. There's a bunch that are in fast followers, but the vast majority are really quite slow in RegTech that are still using paper, right? So to encourage them to have more adoption is if we can have some sort of funding that can help push them over the edge. So it can be a joint funding, right? So as long as the industry ponies up a bit, the government may pony up a bit, and then they can try out these technologies. So we've actually suggested something along those lines to the regulators.
Okay, thank you, Brian. Malavika?
I think there's a couple of pieces to it. From a regulatory perspective, I think regulators have been talking about various themes, but with so much going on right now, it would be good to have them start to reiterate some of the more urgent issues, to bring them back up so that across jurisdiction, you've got regulators looking at these things at a level of parity. So for example, in the data and reporting space, you've got new identifiers that are due to come in from 2022 onwards. Now that seems like a long way away, but to Brian's earlier point, if you have to plan for 22, you've pretty much got to be doing your homework in 21, right? Which means you're looking at budget cycles now to be looking at these things. So you almost need I would encourage regulators, regardless of jurisdiction, because some are doing it, others I think they have other priorities on the table at the moment, but to have regulators start to bring to the fore what some of their expectations are, remind people of some of the timelines for some of these pieces. That's one part. On the flip side, though, what we're also seeing is a lot of collaborations between institutions and RegTech providers, people coming together to provide that funding to do proof of concepts, and then work with regulators where necessary as trials, whether it's for digital reporting, whether it's for things like SupTech, for example, supervised technology. That's, I think we'll start to see a lot more of that in the coming months and years, which is almost where supervisors are looking at the RegTech platforms, but looking at it from their perspective, looking to understand how they can adopt it. Again, whether it's for reporting, whether it's for supply chain risk, whether it's about data consumption or analytics, really starting to look at those pieces. So I think it's a broad-based answer, but really it's in three things. One, to highlight that certain changes that are coming up, and so that people are start to become aware of things like the UPI, to look at creating to be more engaged in the SupTech space and set those benchmarks and expand those sandboxes. And then the third thing is actually collaborations between institutions and RegTech providers that, if they're successful, can be taken to regulators rather than regulators driving them.
Okay, thank you very much. Grace, just your sort of quick thoughts from you.
Sure. So I think this is a fun question because I used to be with the MAS for 5 years, and I did use some of these early days, trading surveillance solutions myself. And I think since then, as Malavika has alluded to, tech has really improved tremendously. I do think that the regulator should keep a clear line of engagement with those that they regulate. So very simple things like, for example, what Bénédicte Nolens mentions about electronic signatures. It still remains the case that several regulators in Hong Kong, they don't accept electronic signatures for licensing forms. Very simple things like that, which causes issues where if you can't submit a licensing application electronically, and very little things like, for example, making clear their expectations on certain types of regulations or guidelines and what they expect of RegTech providers in this space that are helping to assist the industry. So I think in general, constant feedback, case studies, even comparisons of how different banking entities as well as different types of intermediaries are implementing those solutions. I think that's always quite helpful. So I operate across both Singapore and Hong Kong and cover regulations in both. And I see different aspects of both regulators which are worth learning. And basically that cross discussion in this space is definitely going to help the industry.
Okay. Bénédicte, unfortunately, we've not got a lot of time, but just your sort of a pithy couple of sentences of the priority for a regulator, you think?
So first of all, I have to say the BIS is kind of, it's the convener of the central banks, right? So it kind of sits above the regulators. But I think a lot of the topics mentioned were very, very worthy. I would say we have actually a tech challenge out there from the BIS, so you can look it up. And one of the aspects is really corporate onboarding. I think that lags behind individual onboarding. So the digitization there is still quite lacking quite a lot.
Fair enough. Okay, guys, thank you so much for all your time and your input into this discussion. And I hope that sort of set this event on the right path. Thank you very much, guys. All the best.
Thank you.
Thank you.
Cheers. Bye-bye.
Bye.